Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, hello. Hello, hello. Can you hear me? Okay. All right. So good morning, traders, and welcome back to London session. Today is a new day. It's a new week, and with a new week comes new opportunities, new analysis. So hopefully we have a productive week, a week full of TPs and very few stop losses. So let's start as always with the weekly high impact news calendar. Let's see what we have, what news releases we have this week. Obviously, we don't have all the news releases because of the government shutdown. So let's get to it. On Monday, I think on Monday and Tuesday, we don't have anything. So we start with Wednesday. On Wednesday, we have the German CPI, which the previous reading was 0.3%. The forecast is 0.3%, so no change. If the actual comes in higher than the forecast or the previous, this should be considered as a bullish sign for the euro, because inflation or high inflation means that the ECB or the European Central Bank has to keep rates higher for longer. Okay. Here's a smile. All right, so that's for German CPI. And then we have on Wednesday, November 12th, we have the 10-year note auction. The previous was 4.117. We don't have a forecast number released yet, but I think that it will stay around this number. It will not be much higher or much lower. We're talking like maybe 0.01% difference. That's it. Nothing more than this. Because what affects this is the future outlook on the interest rates in the US. So since the future of interest rates is uncertain, and the Fed very recently in their what's it called, in their press conference, in their last meeting, Jerome Powell said that a cut is far from certain. A cut in December is far from certain. So this means that we're going most likely to we're going towards a hold or a steady hold in interest rates in the US. So this will not change much because the markets are not pricing like a cut. So it will not be lower than 4.117%, or at least not so much lower. That's for Wednesday, and then we move to Thursday. That's a busy day. Most of the numbers are coming from the US, but God knows what they will pull out of the economic calendar. Let's start first with the numbers coming from UK. We have the previous reading was first of all we have the GDP, the quarterly GDP for the Q3. The previous reading was at 0.3%. The forecast is 0.2%. So a contraction or less growth in UK's economy. So the actual, if the actual comes in higher than the forecast or the previous, this could be a sign of strength in the UK's economy, and this will be bullish for the GBP or the British pound. Okay. Then we have the GDP, but the year on year or year over year quarterly GDP from the UK. The previous was at 1.4%. So same applies to the one we just mentioned. So we have GDP, we have three numbers. We have the quarterly number, quarter over quarter, we have year over year, and we have month over month. So the monthly is expected to come in lower than the previous, but the same analysis applies to all three. If it comes in higher than expected or higher than the previous, we expect to see bullishness on the GBP. Okay, so that's for UK. We move now to the core CPI coming from the US on Thursday, November 13th. The previous was 0.2%. We have the core CPI, CPI month over month, and CPI year over year. So it's basically the same release, but like different intervals. Okay. So the core CPI is the previous was 0.2%, 0.3% was the monthly, and 3% was the year over year. So these numbers are very important for the Fed to decide if they want to cut rates or not, or to hold. So if the CPI comes in higher, it means that they need to keep rates higher so that this fights inflation. For those of you who are new here, we mentioned many times that when inflation is high, they keep rates higher so that they fight inflation with higher rates. What's the logic behind this? Basically, it's when you have high interest rates, the attractiveness of the currency, which is the USD, becomes higher because people will keep their money in the banks to get higher deposit rates, and the cost of borrowing, which is borrowing from the banks, becomes more expensive. So less money circulation in the economy, so you get like a higher value for the dollar. So inflation is basically the drop in the purchasing power of a currency. So when you keep interest rates higher, it lowers the money circulation in the economy. So you have less supply of US dollar, which brings up the value of the US dollar. So that's how they fight inflation. So going back to the CPI and core CPI, if it comes in higher than expected, this means bullishness for the US dollar. If it comes in lower, then it means that the Fed might cut rates in December's meeting because they have room to cut now to boost growth. All right. Then we have the initial jobless claims. The previous was 218,000 jobless claims. So that's how many people claim to be jobless. They're looking for jobs, but they are unemployed. So if this number comes in higher, it means that the jobs market or the labor market is weakening, which would put more pressure on the Fed to lower rates to boost the jobs market. Because as I told you just like a minute ago, when interest rates are high, the cost of borrowing becomes higher. So most of the companies, except for the cash-rich companies, most of the companies fund their operations through banks or debt. So when the cost of borrowing is high, they don't borrow from the banks, so they have to downsize their operations and like hire less people. That's why it affects the jobs market. So if more people are claiming to be jobless, this will put pressure on the Fed to lower rates so that the companies will start hiring people because of the lower cost of borrowing. They will start hiring people and it will improve the jobs market. Let me see what questions we have. Okay, all good? All good, yes. Let's move to the next one. Crude oil inventories. We had a huge surprise last week, the 5.202 surplus in the inventories, which could mean one of two things. Either the demand is not keeping up with supply, or we have like so much supply. That's basically what it means. So this is obviously a negative sign for the oil price. This is bearish for oil, because if you have so much of something, it means that it's not that expensive. So the price goes down. So a lot of supply means that demand is not keeping up with supply. People don't want it this much, so the price goes down so that it will become more attractive for people to buy at cheaper prices. So also no forecast number here, but if it comes in like higher than this, if it comes in at a surplus, it means that the supply is still like overpowering the demand, and vice versa. If it comes in lower, it means that demand is ticking up, and this could be a positive sign for the oil. All right. Someone is asking something. Pro Trader 2809. And now that the shutdown is almost settled in US, is the indices prices already priced in with the movements on late Friday and today Asia session, or do you see still upward momentum? Now, if they come up with a solution for the government shutdown, and they reach an agreement and reopen the government, this would make the uncertainty less. Okay, this will lower the uncertainty in the markets, which could mean a more risk on feel or mood in the markets, which means that people will start moving back to indices, and we will see upward momentum. I don't know if I answered the question, but that's pretty much it. If the government reopens, this will be positive for the US stock market or indices in general. Then we have the 30-year bond auction. The previous was 4.734%. As I told you, we were talking about the 10-year note auction, from the day before. This is similar because the interest rate projections or interest rate future is still uncertain, and they're expecting to keep it as is, with no change. They're not going to cut rates. So this number, or the auction, will most likely end at a very close price to 4.734. That's pretty much it for this week in terms of news releases. I think now it's time to move to the charts. What do you think, guys? Do you have any questions about anything we just discussed? Is that why BTC is just pushing up, just because it's limited? Exactly. Because it's limited, you have a limited number of Bitcoins in the world. That's why you see it going up and up. We're talking the long term. So the major trend on BTC is an uptrend, basically because it's limited, it's rare. Okay, very similar to gold. In real life, we have gold in as a traditional safe haven. Why is gold very expensive? Because we don't have a lot of gold in the world. We have a limited amount of gold. All right. Okay, now I think let's move to the charts. Let me share my screen. There you go. All right, so as always, we start with the DXY, which is the dollar index. Last week closed somehow bearish, so we might see a correction to the downside. Let's start with the monthly, because this monthly candle is still fresh. Last month, which is October, we had what's it called, the DXY closing a very bullish engulfing. So we might be seeing it going back to 98.5 as a correction of this engulfing candle, and then we might be going back up. So what triggers it? I think this week's close, or past week's close. It closed inside the bands, so I'm expecting it to go back to, as I told you, 98.7.5, this area. So it will find support somewhere around the 98.6, 98.7, and from there we'll see where it will go, which is very interesting to me, because this gives me a very good setup on the Euro USD, which we will get to in a minute. But for now, that's pretty much it. Let's see. Okay. Let me draw some variations for this trend line to see if it supports it. If it goes back, yeah, it might look something like this. But overall, it broke above this area, which is sorry about that. which is above the 100.25. It broke above, but it got faced with this moving average, which is the 200-day moving average. That's why we saw this rejection, which is very normal. Now I'm expecting it to go back to 98.7, 98.6. We'll see how it goes. But for now, the outlook is bearish for this week on the XY. Yeah, it broke below this moving average on 4 hours, tried to retest from the upside, couldn't, got rejected again, and now we're moving towards those moving averages, which might give us some support. Okay, so that's pretty much it for the XY. Do you have any questions? Yes, we're going to gold. Just give me a second. Can we expect a major correction in the US stock market? Yes, but in my opinion, it's still premature. We might see an upside momentum first, maybe a new all-time high, and then we see a drop in the stock market. Why? For a very simple reason that usually closer to the end of the year, there's something called the Santa Rally. Santa Rally means that closer to Christmas, markets start to climb higher and higher. Historically, that's what investors do. So we expect to see a Santa Rally, and we might see new all-time highs, and maybe by the end of Q1 2026, we might start seeing some weakness. But for now, let's actually go to NASDAQ and see. That's a very good question. Let's move to NASDAQ. We start, of course, with the big picture. We go to the monthly. For me, the monthly closed like last month, closed very bullish, and this was not able to break below last month low. So it's still bullish on the monthly. We move to the weekly. Okay, so look what we have here. We had an uptrend, then we had this very hard correction, but it got faced with this, what's it called? This support, which is the moving average, and it got rejected from it. So we have a strong rejection, almost 1,000 points. So that's no joke. Okay, see, even we have another moving average on lower time frames, which is the daily, that also rejected the price, and I'm expecting it to keep going up to, let me see, we might see 27,000 points on NASDAQ soon by the end of this year. So yeah, my outlook is mostly bullish on the US indices. All right, let's see. Let me check. Yeah, we're still in uptrend, very clean uptrend. Nothing shows weakness till now. Okay. What else do we have? Okay. Now we move to Euro. The monthly time frame. Okay, so very similarly, or like not similarly, the opposite of the DXY is Euro USD. So we had this very strong engulfing candle, the bearish engulfing. I'm expecting it to reach somewhere around here, the 1.1650, and I'm selling with my stops above the 1.1790, and I'm targeting 0.9. That's a trade I'm waiting for. Let's go to weekly. Okay, so yeah, on the weekly, we close above this, so we might be going to this area, which is, as I told you, the 1.1650. Very high probability. I will be waiting for this setup to materialize. Yeah, it's on a downtrend. It broke below this uptrend. Look, We had this uptrend. Now we broke above, broke below, sorry, and we started trending lower, which is like lower highs, lower lows, and so we have this this small start of a downtrend. Okay. We're going to reach the gold. Yes, let's finish with FX first. We go now to GBP. Let's check the GBP. Okay. So what's happening here? Monthly was very bearish. Let me check something. Yeah, we might be going up because it got rejected from an important moving average. Let me go to the weekly. Also, the weekly got rejected from an important moving average and closed above that moving average, which is a bullish sign. And it's basically above all moving averages, really. Now, let me see the daily. I remember we had a failure swing on the daily. Yeah. Yeah, here it is. So we had this trend line. So we might retest the 1.3260. If that did not hold it, we might be going to 1.34 area. Okay, that area is like very tempting for me to sell because my stop losses will be very close by 100 pips. That will give you almost like 1,000 pips. So 1 to 10 almost. Let me draw it for you so that you can see what I'm talking about. If it reaches here, I'll be very tempted to sell because my stop loss is here. Let me check. That's, yeah. And I'll be targeting this area. So that's a 1 to 8. That's a very good trade. But let's see the setup first. I'm not going to jump to conclusions yet. Yeah, that's pretty much it. No need to go any lower. What else do we have? Do you think it's time to move to gold, guys? Let's move to gold. Yes, everyone is waiting for this. We start with the monthly. The monthly closed somehow bullish, and it closed above the $4,000 mark, which is a very like bullish sign. The monthly candle, the previous monthly candle, it closed green, which is also bullish. Let's check the weekly. The weekly got rejected from a very important trend line. Last week it closed like fairly bullish, but not very bullish. But we saw some downside or some like drops in gold last week. But it ended the week strong and it closed above the 4,000 again. So it's not able to close up below 4,000 even for a week. So that's a bullish sign as well. And we saw after this break, after like when this candle opened, which is today, we saw a strong momentum to the upside. Now let's see if that momentum will continue to persist or it will change. So okay, now let me tell you something. Here we had a very interesting breakout out of this area, but I need to see it close today above this area, which is 4,050. If it closes above, we will have something we call in technical analysis a failure swing. So what is a failure swing, guys? The failure swing is as follows. So we are having, look, we have this lower highs, lower lows, lower highs, lower lows, lower highs, and then up, no lower low. So it failed to break this low, okay? It failed to break this low, and now it broke a previous high, which is this high. So that's a failure swing. Like it ruined the downtrend, the medium-term downtrend that we had here. So since it ruined it, I still need to get my confirmations, but if it closes above this, if it closes above the 4,050, I think we turned bullish again and we will see gold climbing up and up and up all over again. So that's for the 4 hour, but let's look at the other side. Now we only have one more moving average in the face of gold going up, which is the 126-day moving average. This moving average is very important. Like prices usually get rejected from this moving average pretty strongly. So it might be a correction to the upside. That's why I told you I want to see it close today above 4,050, and then we might be talking about a climb to the upside or a potential long position. But before that, like imagine this. I want you to like visualize this candle. Imagine, okay, after breaking here, it closed here. So is that bullish or bearish? It's most likely bearish. That's why I'm telling you I need to see it closing above here. If it closes below, no, that's bearish, and we might be going to retest this moving average around the 3,800 something. But for now, it's very early to decide. For me, if I'm day trading, I would go up with gold unless I see something on lower time frames that scares me of gold. But so far, gold is going up pretty neatly. Higher highs, higher lows. It's above all moving averages on the 15-minute time frame. So for me, I'd go for buys on gold if I'm day trading today. And especially we have this, the 8 hour closed outside the band and outside the 50-day moving average, which is a bullish sign. Now, we might go back to 4,050, but if we do and go back to 4,050 and we form a support there, this could be a very good buying opportunity if we get a setup again, if we get a setup. And I'll be targeting the all-time high and possibly new all-time highs. So that's pretty much it for gold. Let's check the 1 hour. Also, the 1 hour is very, very bullish still. So let's wait and see. That's pretty much it. Do you have any questions, guys? Do you have any questions? Okay. Guys, do you have any questions about anything at all? Tell me. Let me check what other things didn't we analyze. You know what? Let's just go through the USDJPY real quick. 1 second. We go to the monthly. Monthly is very bullish. It closed above all moving averages and outside the band. So we might be seeing a breakout to the upside. We go now to the weekly. Okay, the weekly is also still bullish. Previous week closed somehow bearish, but it's not very bearish, to be honest. I'd be targeting 158 easy if I have a good setup from here. Let me go to the daily time frame. Okay, so on the daily time frame, we have a very clear short-term trend, uptrend, which is this. So every time it reaches back or it retests the trend line, I would buy with my stops below the previous low and keep going up with it all the way to 158. Okay, that's about, let's see, 4 hours. Yep, no need for this. You can remove it. Yeah, it's still going up. Let me check if we have any divergences. Yes, we do. But this divergence could mean something. Your JPY. Okay, I'll get back to the questions in a bit. Let me finish the USDJPY. So it's showing some signs of weakness on lower time frames, but this could be only the correction of the DXY that we were just talking about, that it might go back to 98.5 or 98.6. So this drop in DXY might drag it down with it. I'm talking about the USDJPY. It might drag the USDJPY down with it to maybe this area, the 152.50 or the 151.50. Okay. Only then I could be looking for buys targeting the next resistance zone of 158. Okay, now let's move to your questions. Can we buy gold? You can buy gold, of course, but wait for your setup. Do not buy just because I told you to buy. Your JPY, we'll get to that in a second. Can we buy at 5? Yes, you can trade gold on the 5-minute time frame, even the 1-minute time frame. No problem with that. But as long as you manage risk and as long as you use your edge, not just buy like very like blindsidedly. Okay. As a beginner, give us some advices for trading journey. Okay. As a beginner, I would say learn more and keep learning as much as you can, because as much as you know, or as much as you think you know in this market, um, it's a lot of work to actually understand the markets and the dynamics of the markets. So you need to know that you're up against the brightest minds in the world. Um, this is a zero-sum game. So what you make, someone else loses, and what you lose, someone else makes. So you're basically in the game of taking money from someone's pocket and putting it in your own pocket. Okay, so guess who's against you? Wall Street traders, people with the best training, the best education, the best mentorship. Those people are trying to take your money, and you're up against those people. So you can imagine how hard it is to actually take money from such brilliant people. I'm not telling you it's impossible. It is possible, and many of us are doing it, but it's not as easy as you might feel sometimes. Sometimes you feel it's hard. Sometimes you feel it's easy. It's never easy. Trust me. Just like treat it as a real business and learn whatever you can to learn, or as much as you can about this, so that you can get an advantage in the markets, so to speak. Okay. And of course, my number one advice would be journal your trades, because journaling your trades, your journal is basically your personal coach. Um, Only by journaling your trades, you will know what mistakes you made, so that you can avoid them, and what good things you made, or what good things you did in the market, so that you can repeat them and improve on them. Okay. I hope I answered your question, but that's pretty much it. Learn and then journal your trades and try to learn from the right people. Do not just go all over YouTube and try to find strategies. And yeah, of course, I forgot to tell you this. Do not strategy hop. Do not keep changing your strategy. Sometimes your strategy will make money, sometimes it will lose. It does not mean that when it loses, you have to change it. No, sometimes you just need to stick to your strategy, even if it loses. When you're in a losing streak, just lower your lot size or your position size. It doesn't mean that you need to change the whole thing. Yeah, it didn't work. Now I need to change, even though it worked many, many times before. Makes sense? So I think that would be a good ending statement. Yeah, I answered all questions. Let me see the Euro JPY real quick. Euro JPY looks bullish to me. Let's check the weekly time frame first. Yep. Yeah, it's very, very bullish. It's very bullish. And I think the bullishness is coming from the weakness of the JPY. It doesn't mean that the euro is very strong. No, it means that the JPY is very weak. So after analyzing USDJPY, we saw that it might reach 158, which is like strong dollar, weak JPY, right? Because $1 is buying you more JPY. It means that JPY is becoming weaker. So this uptrend, or this major uptrend, is basically caused by the weakness of the JPY, not the strength of the euro. Yeah, it's still very, very bullish. Yep, bullish as well. Look what I would do. I would just like draw a trend line here and just keep going up with it. Whenever it reaches my trend line, which is around here, I buy with my stops below previous lows. That's a very, very straightforward way to trade Euro JPY. So gold is bullish or not? Gold is bullish as of now, obviously, but I still want to see it close above 4,050 tonight. If it does, I'll be sure that it's bullish for the upcoming period. If not, we might be going down. If it closes, for example, below 4,000 tonight, that would be a bearish sign. All right, you're welcome. Life full of colors. I hope I answered all your questions. All right, guys. So have a good trading week. Good luck. Take care of yourselves, and always remember, trade responsibly and trade in. See you.